Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is what you need to know before going into trade for 3rd September 2021. In the international market is watching August non-farm payrolls very closely today. Major participants are out of the market and waiting for the new clues from the data. USDINR closed at 129 percentage points and 30-year at 190 Thursday. In the crude oil market, crude is trading at 72.82. Short-term range for crude is 70 to 73 for the last couple of weeks. In the currency market, dollar index DXY is at 92.16. Today's range for DXY 91.91 to 92.74. A strong NFP data will bring DXY back near 93 levels. A big miss like April NFP data will force DXY to close below 92 levels as well. USDCNY or Chinese yuan is at 6.46. USDINR with a high of 73.13 closed at 73.06. Support at 72.90 and resistance at 73.20 will be seen. As far as the trading idea for USDINR is concerned, market today will be very choppy and US NFP are due today, so expect volatility. Though much of the price action has already been priced in USDINR, so we don't expect USDINR to fall further. 72.90 seems to be guarded for now, but below that 70.70 would be the next stop. On the upper side, USDINR 73.30 looks pretty much possible. Do not try to play range bound trading today. Go for the trend trading. In the domestic market, euphoria continues in the domestic bond market yesterday as well. This time, it is the expectation of lower borrowing from the central government in October-March H2 FY22 calendar. For the GST cess shortfall, Centre was supposed to borrow rupees 1.5 lakh crore and to pay that amount to the states, out of which Centre has already transferred rupees 75,000 crore to states in July. So the remaining amount due to be paid to the states was rupees 84,000 crore, but now as the GST collections are looking good, market is anticipating that the Centre will have to pay less than rupees 84,000 crore as part of their GST shortfall terms. As this GST borrowing was expected to be done from the shorter maturities, and now there is an expectation that the short-term borrowing would be less, the shorter 10-year yields have rallied the most. 563 2026 at 558 versus 561 the previous trading day. 664 2035 closed at 671 versus 674 the previous trading day. If we talk about the trading strategy for domestic market for today, 610 2031 is now at 617. All the participants are selling except mutual fund segment. As we all know, mutual funds have mandate to buy as they can't keep cash idle for too long. Hence, this is not the sustainable rally, and we have and are advising our clients to lighten their positions as much as they can, considering 615 as the bottom for the interim period. As we discussed yesterday, there is a very good likelihood that the 615 is touched to give an exit to PDs whoever is holding, but they won't mind exiting now as well, as the coupon income would have compensated well enough by now. Trading range for 610 2031 is 615 to 621 for today. That's it for today. See you next week with the new episode of Night Snippets.